Gold is a major part of the future, whether you believe in it or not. The East certainly does. He who has the most gold wins, as Kissinger said. But he also said, be careful if you revalue gold, because what if some other country, if we revalue gold at 20,000 to cover some of our M0 deficits, well, then that's the new floor. But then what if China does have more gold than us? Then who has the leverage? I don't know. What does Russia really have? The World Gold Council does not tell us not because they're dishonest, because they don't know. Why don't we have the audit? So it's very convoluted. If we had more...
Not this year, not in a midterm year.
No, but that was another, again, not pro or anti-Trump, but that was another promise. It just hasn't been delivered. Peace in the Ukraine, not delivered. Epstein list, not delivered. Look, I'm not anti-Trump or pro. I'm just saying, I'm cynical about politics in general, but a lot of things have not been delivered. But that Elon Musk, everyone was so excited about this audit. Crickets. Yeah. Crickets. Yeah. Usually there's a reason for that.
Or we could start talking about real legitimate targets that some are throwing out there now of 10,000, 20,000 on gold, 200, 300 on silver. But like I said, I think for days, weeks, and maybe a few months, doing nothing may end up, or at least I believe, will be the best choice among all.
Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
My sense of what's going to play out is in a matter of days, weeks, or just a couple months. Multiple years down, there's only one opportunity. Listen, I said it in a recording either today or over the weekend. Forgive me because I made a few of them. The dollar's dead. Only no one's told it or the ones that still love it. It's a dead instrument. It's rolling over. It's going that way. That's one of the aiding factors to why gold and silver is not going to get back anywhere near the majority of the so-called gain as it's done in past years. That's what I don't want people to lose sight in. This parabolic decline doesn't mean it's going to get back 50% of the entire gain or something. It just needs to go through that and then a base building period before there isn't anything that I find undervalued, compelling. I only own one stock. In fact, I own 3 stocks they're extremely high on, but I sold 2 of them last week, not because they've turned bad or anything fundamental on their end, is because I wanted to have even more of a bigger cash position because of my concern about the stock market. This is what's most interesting about this. I don't recall, somebody that's been around as long as me or even longer can chime in the comment section, but I don't ever recall stocks going universally up at the same time gold and silver are going straight up. It's never really been that way. It may be part of an all-out bubble that some people have spoken about, but there's nothing that I can see. So people say, well, what do I do at the moment? Well, there is liquidity. I mean, the liquidity I think is important. I'm concerned about some regular money markets. My money's in treasury bill money markets. And I also just think now that sometimes you have to get used to, sometimes it's just better to be doing nothing, building liquidity for buying opportunities later. How many times I would ask those people that are shaking their head now, what's this guy saying this? How many times did you say over the years, man, I wish I had some money, I would be buying this right now. Well, now this is the opportunity I think that we're going to give ourselves for sometime in 2026 to act on something that got cheap again. But right now, I don't see anything that's cheap anywhere.
Gold was being mocked by the street as a pawn shop asset or too volatile. Looking back over the last quarter of a century, it's outperformed even this S&P in total return. So there was a deliberate attempt to misunderstand precious metals. We've been talking about precious metals as being a far better store of value, not in appreciation versus the S&P, but in holding its purchasing power better than a fiat currency. So what does this mean when we look at $5,000 gold? If I had talked even a year ago here about $100 silver that he's selling his book, I get it. And I totally, my BS detector, when I was allocating money to others, I was always, where is this becoming extreme? Sure. And I am very cynical and skeptical, as anyone should be listening to me or anyone else. But do your own homework and think about this and come with your own conclusions. But what we're seeing really in this, what John Rubino rightly called just a horizon of distrust across everything, whether it's left or right politics, whether it's globalism, whether it's immigration, whether it's social unrest, we all have a different opinion. We just don't trust the decisions, and we argue about that. But I think when you look at $5,000 gold, you say, this is a bubble. This looks like NVIDIA. Or this looks like Lucent or Qualcomm or Amazon circa 1998. I get it, but it's actually much more disturbing than that. Again, take out my bias if you can. Yeah. It's what we're seeing with $5,000 gold isn't a sign of how bubbly gold is. It's in a bull market. It's a difference. The reason it's in a bull market is not that $5,000 gold should shock you. What should shock you is how bad fiat money has got, that gold has to be 5,000. It's not just a bunch of retailers going crazy to follow the trend. The bulk of this demand is coming from central banks.
Yeah.
Retail sector is hardly allocated at all. You see it on news. It's nothing compared to what central banks are buying. And again, when did Noah build his ark? Before the rain. When do you load your gun? Before combat. When do you stock up on food? Before the snow. What we've just been seeing since we weaponized the U.S. Treasury and the world reserve currency in 2022 is a tripling of central bank gold buying. It should be a massive headline. Why are they doing that? They're building the ark before the rain. They see the rain coming. What are they building that ark with? Gold. I'm sorry, I may be a gold guy, but that's not a bias. The world sees this. The BIS sees this. Ray Dalio sees this. Druckenmiller, Paul, it's not just the gold camp. Even Morgan Stanley sees this. So again, get past, he's selling me something, do your own homework. $5,000 gold, of course it's disturbing, but as many of us and we meant this, I'm not hoping gold gets to 10,000, I'm afraid it is. Because if gold gets to 10,000, what that symptomizes, what the symptom of that is a credit system literally burning right in front of our eyes, and a currency system melting in front, and it has been slowly since 1971, now it's happening exponentially. And that's the real issue. It's the currency. It's the currency derivative of the debt market. It's the explanation of this gold market. And of course, the COMEX can't keep up. You look at the BRICS, Enbridge, all these discussions, de-dollarization that's been here since 2022. We all get it. There was never going to be a BRICS-backed currency, a gold-backed BRICS currency that all the BRICS nations and what they did, because the BRICS countries don't necessarily trust each other, but they do trust gold. And what they're coming up with, slowly but surely in the laboratories of their long-term thinking, is making gold 40% of any net trade settlement in the BRICS world. So they'll do regional currencies and regional trades on anything from energy to widgets, and then they'll net settle that in gold, which is a brilliant idea. Yeah. That way, each nation has the right to still debase its own currency, because every debt-strapped nation eventually wants the freedom to debase its currency in an emergency. If you have a gold-backed currency in those nations, you can't do it. So that's being realistic. But if you're going to trade, you've got to have a real asset, a coverage, and that's gold. Even the IMF during the COVID hysteria, when they were talking about the new Bretton Woods 2.0, they said in their little chart, if you watch their video, at the bottom of that chart is gold in the new central bank digital currency dystopia. The only good part of that, for it to have any credibility, it has to have some gold coverage. So gold doesn't become a new currency, but it becomes part of the ratio. And it's emerging everywhere. And again, that explains why the bad guys are stacking up.
100%.
Watch what they do, not what they say. Yeah. I'm not a fan of any of these parties, but you can't deny, don't fight the Feds, don't fight the central banks. They're stacking for a reason. It's not just because it's a trend. Well, you could reprice gold. You could take the 260 million ounces in the U.S., reprice from $42 to whatever price at spot or maybe higher. And that's a little QE with gold. That takes some of your debt level dents down. That's a whole other conversation. Yeah. But in the meantime, gold will give them some liquidity, but what they'll probably do is they'll just inflate away their debt by debasing the currency and lying about inflation. That's the current mode. And then eventually we'll make it more digital.
Yeah, CBDC, that type of...
Some type of dysfunctional reset where Bretton Woods comes in and we say they'll blame it on anything but themselves. Before it was COVID, then it was Putin, and next it'll be Venezuela. Who knows? They'll be a bad guy. It will never be the bathroom mirror of the very policymakers who for decades have driven us into this wall, in particular the U.S. and the Fed. Who's going to replace the dollar for the world reserve currency? Who has a better bond market than even our bond market? China doesn't. Yeah. Who has more? Even with us, even with Trump and all the distrust, the U.S. has some more credibility than any other nation. It also has the cognitive, the memory of it, the muscle memory of it. But its share of FX reserves is getting lower and lower. But it's still a major part of FX swaps. It's still critical to the U.S. Treasury is critical to derivatives trade, which is another topic of risk. But no, the dollar's not going to be replaced. The Chinese and Russians aren't stupid. They're not going to try and beat the dollar. They're going to go around the dollar, just like a good army would do if they hit a wall like the Maginot Line. They just go around it. Well, we don't really know who's taking delivery off the COMEX. And my guess is if I were Jamie Dimon, it'd be Jamie Dimon. He's not stupid. And so that's the great mystery. First of all, let's just do a frickin' audit. Come on, if gold is a major part of the future, whether you believe in it or not, the East certainly does. He who has the most gold wins, as Kissinger said. But he also said, be careful if you revalue gold, because what if some other country, if we revalue gold at 20,000 to cover some of our M0 deficits, well, then that's a new floor. But then what if China does have more gold than us? Then who has the leverage? I don't know. What does Russia really have? The World Gold Council does not tell us not because they're dishonest, because they don't know. Why don't we have the audit? So it's very convoluted. Pro or anti-Trump, but that was another promise. It just hasn't been delivered. Peace in the Ukraine, not delivered. Epstein list, not delivered. Look, I'm not anti-Trump or pro. I'm just saying, I'm cynical about politicians in general, but a lot of things have not been delivered. But that Elon Musk, everyone was so excited about this audit. Crickets. Crickets. Usually there's a reason for that. Look, for years, and everyone asked me a price target, I always say, and it's not to avoid the question or evade the question, I say it's going to be meaningfully higher because paper money is going to get meaningfully weaker. And when you're measuring a price in any asset, including gold and silver, in a fiat currency, it's like trying to put a hockey puck into a moving net or throw a pitch at a catcher's glove that's moving. You're just measuring in something that's inherently melty. You can measure it in, as Egon says, chickens or barrels of oil or real estate. But again, $5,000 or $7,000 gold as a price target is a smoke signal that's really not about the gold and silver that we're price targeting. It's about how much we distrust the underlying currency. And we have the muscle memory of most people are good. They trust their central bankers and politicians, not because they're stupid or naive. They just assume that everyone would say the truth. When you've been in our game, a veteran of this combat long enough and looked under enough hoods, that trust died a long time ago. And in a sense, you're an insider. So, and believe me, many of my clients are bankers and hedge fund managers. They're in the system. They don't trust it. So what have they been stacking for years? Gold. So when you have the advantage of being a combat veteran of that space, you know what ammo to use, which grenades don't work, which trenches are safe, which trenches are dangerous. That's not genius. It's just experience. And you try to convey that to other people, and you make them hope they believe you, but if they don't, at least look into it. Don't just be cynical. I would be cynical. I'm the first guy to question anything sold to me. But it's history more than it is economics. It's basic math. And it's the history of currency destruction to monetize debt gone wild. And the fault of that lies in our policymakers exclusively. And this independent beast from Jekyll Island, it's called the Federal Reserve, which is neither federal nor reserve, that sits on Constitutional Avenue and is a violation of Article 1, Section 8 of our Constitution, made legal by Woodrow Wilson in 1913 against his will. So it's a fascinating story. Well, look, as we were talking before this, things like quantitative easing, swaps, derivatives, the COMEX, they're meant to be incredibly complex and kind of wonky, and they make your eyes roll.
Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.